Hey traders, Raghee here, and in this free video we're going to cover a number of the symbols that I'm getting asked about the most as we are on the eve before the big FOMC reveal. So what is it that we're expecting? What are the markets that are going to be kind of in the crossfire of this, and what are the setups that I'm watching? So let's get into it first by looking at the CME Fed Watch tool. So this is the CME group, cmegroup.com. If you just Google CME Fed Watch tool, this link will come up. And we're taking a look at the July meeting date probabilities, the target rate probabilities, and they continue to be extremely high for the 25 basis point cut. Now, you know, for a while, this was dropping as this one was increasing, and the reason for that was there was a very misguided, nearly delusional expectation that we were going to see a 50 basis point cut, not a 25. The market's since sort of come to its senses, and we know this is going to be a quarter point cut and what is expected to be a very accommodative statement. Let me give you one other tool to use tomorrow. This is the Wall Street Journal Fed Statement Tracker. So if you Google WSJ Fed Statement Tracker, this is a free service. You don't have to be a member of the WSJ to use this. Terrific way to understand what types of changes we're expecting and which sentences, which words we're going to be keying off on. So I like to, give this a good read going into the meeting, and you can get a pretty good idea of what type of adjustments need to be made. And then when we see the adjustments, we see what's been changed, they're incremental changes, you'll have a much better idea if the message is what the market is expecting. Did it meet the expectations of the market? In this case, let's go back on over to that CME tool. The expectations then fast forward to September 18 and whether or not we're going to get another 25 basis point cut, which you can kind of see is already in the works. This is the target rate, right? 175 basis points to 200, 1.75% to 2%. So you can see this, it's already starting to brew that next 25 basis point cut is in the works. All right, so that's number one. Number two is what markets are going to be affected. Now, what I'm going to take you through is the bond market, the dollar, and the euro too. We can look at the 30-year and the 10. So this would be ZB and ZN. The 30-year, and I've been talking about this one for a really long time. Any one of you who've been watching these free videos, or if you're a member, you guys know we've been bullish bonds since Q3, Q4 of last year. Long bond, short yield, and long other short yield sensitive sectors and ETFs, home builders, construction, utilities, etc. So a lot of the theme built around not only my portfolio but my current trading book hinges on the 30-year and preferably even the 10-year continuing higher. If the Federal Reserve is preparing the market for a little bit more of a systematic 25 basis point cut at the next handful of meetings, do I believe that's going to send the bond market higher? Here's something to remember. I think there's probably still a small group of the 50 basis point, let's call them the crazies out there. And there may be initially a little bit of a letdown because we didn't get the 50 bips and rather got the 25. Crazy, but it might. The other thing is going to be the statement itself. If that statement doesn't deliver, we could see some weakness in bonds. But again, I do believe the Fed has to continue to cut, and then because we have time on those TLTs, I think we certainly have enough to get through this event and keep going because we have the September 20s. Those are my favorite expirations. September for my futures, September for the ETFs. So we have plenty of time and we're not, doing battle with the theta decay monster, because look, I don't mind being a little bit short on Delta. I don't even mind being slightly out. I'd rather be at, but I don't even mind being slightly out of the money. We cannot put our back against the wall when it comes to time. All right. So The other market I want to talk about is the euro. And when we talk about the euro, we're also talking about the dollar. I think the dollar might weaken a little bit. That's going to offer us another opportunity to buy US dollars against weaker currencies. And that's going to be the Aussie, the euro, a pound. I mean, places that we have continued to be dollar bulls. If you're a dollar bear, by the way, you're going to want to pay attention to markets like the Canadian dollar. You're going to want to pay attention to markets like the dollar yen, where in these two specific situations, you can short dollar, primarily against the Canadian dollar, secondarily against the yen. So there are pockets of dollar strength against particular currencies and pockets of dollar weakness, again, against particular currencies. But those are the main markets that I've got my eye on. Do I believe the equity markets are maybe going to throw a tantrum and then start to rally again? I am very bullish the markets, gang. We might get an initial sell-off. Again, the 50 bip crowd might be a little upset. The rate statement may not deliver as strongly as we expect, but look for the Federal Reserve members to sort of right that ship. If the statement doesn't have the desired impact, they'll come out and they'll start to make the comments necessary, I believe, just to keep this uptrend intact. Not that that's their sole goal, but to really express to the market that they have their back. Do I want to be short the markets? Only one, and we're going to talk about that one in the premium video. All right, gang, I'll see you in the next update.